What's going on, everybody? It's Stas here. So the stock market is seeing another aggressive sell-off today as the S&P 500 is currently down 40 points, down 1.1%. The Dow Jones is down 220 points, down 0.8%. And the Nasdaq's actually getting crushed the worst, down over 240 points, down about 2% with an hour and 30 minutes left in the session today. And in this video, we're going to be talking more about the stock market, breaking down some technicals, going over my thoughts around this market pull down. Are we heading lower? Is this just the start of it? Or is it simply a pull down and it's a blip in the road and we're going higher? I want to break down my thoughts there, as well as the top stocks that I'm looking at right now in this broad weakness. And I want to share with you guys what I've been personally doing here as of late. So a lot to go over, and plus we're going to talk about the August jobs numbers as well. So if you guys find value in the video, hit that like button for me, consider subscribing to the channel, and also check out our free Discord chat and Facebook group, link down below in the description box. You can also claim one free stock from Webull valued up to $1,400 by simply depositing $100 into the account using my link down below. And again, that's how you get one free stock. I also get a free stock since it is an affiliate link, and I do appreciate you guys if you do use that link, as it does help me and all the free content that I'm putting out here on YouTube. So let's get into it, guys. Let's start off this video and go over what's been going on. I mean, the markets are still live right now, and it's pretty obvious that we are seeing a bit of a recovery here in the markets, and you guys can see it if you look on this intraday chart. I mean, take a look. The S&P 500, it opened up at about 3450. We saw a nice little rally in the morning of about 30 points up to 3480. But then, guys, this thing took a massive hit from 3480 all the way down to 3350. Guys, it shed 130 points, roughly 4% from that peak in the morning down to the lowest point of the day, where we double bottomed and we broke out and pretty much got to where we are right now. So that's telling me that the selling's not over. We took out the lows from yesterday quite aggressively, right? A lot of sellers were coming in, and the trend continued. The technicals are showing us now on the 5-day, 5-minute, that is, that we pretty much tested a point this morning at 3480 at a lower high. We failed breaking out completely, like I'm showing you guys here on this trend line. You know, if we did that and we fully broke out, it'd be a different story. But we failed to break out. Hit a lower high here, we dumped, hit a lower low at 3350, and just because we're rallying off the low right now, it doesn't mean that the bulls are fully back in charge. The truth is, the bears are still in charge right now in the short term. I'm talking the previous 2 days, well, really just today and yesterday. The bears are still in charge. Overall, of course, the bulls are still in charge, guys. If we're taking a look at the 4-hour chart, I mean, the bulls are clearly still in charge, but I'm talking about yesterday and today, right? Until the bulls are able to break out of, let's say, I'd say at least 3,500. I mean, until the bulls break 3,500, I'd say the bears are still in charge. The bulls need to break out of the highs from earlier today, and they need to break out 3,500, which was a resistance from yesterday. So overall, at this point, yeah, the markets are rallying off. S&P's about, let's see, about 65 points off its lows, so very volatile of a day. But overall, the bulls are not in charge. They're trying to get in charge, but it's a battle. It's a battle. And you guys can see it across the Dow, Nasdaq as well. I mean, the Dow, it went from about 28,500 this morning, sold off to about 27,600, so a nice drop of 800-ish points there. And now we're up to about 28,000, another 400-point rally off those lows. So this is starting to remind me of the volatility from back in February and March. Not saying it's another massive crash like that, but this is what we were used to seeing back then. We saw big drops in the morning, followed by little rallies, followed by more drops. So at this point on the Dow, $28,200 needs to break for the bulls to gain control again. And even then, I mean, if 28,200 breaks, we're going to need to break today's earlier resistance at 28,500 and this 180 SMA on the 5-hour chart or the 5-day 5-minute chart. So, I mean, 28,002 needs to break and 28,500 for the bulls to take over here. And overall, in the short term, I mean, the bears are in charge on the Dow. But overall, take a look at the 4-hour, guys. This is very healthy across the board for the markets, right? Overall, the pull down, it seems like the uptrend is holding itself, and we'll see, right? It's kind of a battle at this point of direction. At this point, uptrend is still intact overall, but again, short-term time frames are showing that the bears are taking over. So it's like you guys know tug of war. It's like that right now. Tug of war back and forth between the bulls and the bears. And you guys can see here on the Nasdaq, I mean, this is what I was talking about a couple days ago, right? We needed a pull down. We hit 12,400. We tanked down all the way to 10,800 earlier today, I believe, right around, actually, no, I'm wrong. It was more like 11,100. But either way, I mean, I'd love to see the Nasdaq take a hit even further, maybe down to 10,000, 10,500. I think that's very healthy. Even 11,000 is healthy. You guys notice back in the beginning and the middle of July, I mean, 11,000 was that resistance, was that all-time high. We double topped there and broke out, which obviously led to another rally to 12,400. But now that we cooled off, maybe 11,000 holds. Hey, that could be an interesting spot overall. But again, don't get too excited, bulls, because on the 5-day 5-minute, the downtrend is still intact here the past 2 days. We have not taken out the lows from yesterday at around 11,600, right? We're still trading under that. So for the bulls to take over in the Nasdaq, I'm going to need to see a break out of this 180 SMA on the 5-day 5-minute, a break above 11,600, 700, and quite honestly, a takeover back to 12K. At that point, I'm thinking the bulls could push us even higher. And if that doesn't happen, we could be going much lower here in the markets, guys. And we'll see what happens in this next hour. I mean, this next hour, and again, the markets are open for another hour and 25 minutes here. A lot's going to happen. And let me know down below if you guys are watching this. I mean, you're going to be watching this when the market's closed. Let me know down below what happened. But if we see something like this heading into the long weekend here, and by the way, Monday we do have off, so consider that. You can't really make any decisions now since the market's closed, but that should have been something you've been considering today, going into the long weekend. If the Nasdaq does something like this where it gets rejected at 11,500, pushes for that lower low, that's not going to be too good for the bulls, right? Same thing on the S&P and the Dow Jones. Watch out what it does here until the close. Do we rally? Do we sell off into the close? That's going to really show you who won at the end of the day. Did the bulls win the day? Did the bears win the day? That's going to be very important, what happens in the last hour of the session. And speaking of jobs numbers, we talked about this earlier this week as something to look out for. Employers added 1.4 million jobs in August, says the Bureau of Labor Statistics, and that's where I get all my information. Very credible source, obviously. And the unemployment rate went from 10% roughly, which it was back in the Great Recession, if you guys remember. And earlier in this crisis, the unemployment rate was at about 14-15%. Was it even higher than that? I'm forgetting at this point, but it got pretty high, and it went from 10% now to about 8.4%, and we're still down, believe it or not. I mean, and some of these jobs will never come back. That's the scary thing, guys, but we're down still about 11.5 million jobs since February, and we all know that every month, or week rather, that's been going by, we've been getting more and more jobless claims every week. For the most part, they've been all over 1 million jobless claims for the past 25 weeks at this point. But yesterday, we got news that they came out at about 881,000, so under 1 million. So that's a good sign, but still 880,000 people, guys, in 1 week filing for jobless claims. That's no joke. You got to realize that's 800,000 people. That is not a small amount of people at the end of the day. And they ended up adding again, 1.4 million jobs in August, and comparing that to the previous months, back in June, if you guys remember, 4.8 million jobs were added. That's when we kind of saw a snapback here in the economy, when a lot of states around the country started opening back up and so forth. We saw that snapback, about 5 million jobs in June, and then excuse me, guys. In July, we got about 1.7 million, and now in August, again, about 1.4 million. So it's interesting. The trend in added jobs is going down. I'd love to know what you guys have to think about that down below in the comments. And it makes sense because we had that initial snapback, and now it's starting to slow down a bit. So that makes sense in my opinion. I'd love to know what you guys have to think down below in the comments, and share with me any thoughts you have on the stock market. I mean, we're still selling off aggressively. It kind of looks like at this point, guys, hey, we might end up rallying into the close as I'm filming this video. I mean, geez, the S&P is about to go green. That is unbelievable. Well, it's still down about 0.8%, but it's running. It's off about 80 points from its lows earlier today, so the volatility's back, although the VIX is down $2, or not $2, 2 points. I don't even know why it's down 2 points, but yeah, that's just the market for you. We're in a very funky spot, and in terms of my trading, I mean, I didn't do anything today. I'm going to be quite honest with you all. I wasn't looking to force anything heading into this long weekend. Again, Monday, we don't have trading, and I already have open positions. I already have open positions. If you guys watched me yesterday and pretty much all this week, I've been talking about how I'm in Workhorse. I actually added Workhorse at 1840 and at 1730. And guys, Workhorse Group, would you take a look at what the stock's doing right now? It's up to $20 almost, $19.40 to be exact. It's up 10% on the day. Talk about a company, or not really a company, it's the stock. It's not the company doing it, it's the stock price. Talk about a stock going against the grain. I mean, geez, markets are getting crushed. Workhorse on the other side is up 10%. I am loving the strength in this stock on a day like today. So I'm very happy about my position here. Again, I got in at 1840, got more at 1730. Yesterday, I added more at 1730. And yeah, this is one that, quite honestly, I'm looking to hold. Anything above $20, I think it could break out. I mean, from 20 to 25, this thing has a lot of potential. So I'm very happy with how it's doing. And yeah, it's a hold for me right now, despite me being up a decent amount on my position right now. Again, my average cost is around, I'd say, $17.75. So I'm up a good chunk, but I'm not really looking to sell. Maybe I'll put a trailing stop after I finish filming this video. I don't know. We'll see. But either way, I think above $20 is where Workhorse is headed. And I'm also in Tesla. Tesla got crushed today. Went under $400. Well, it's not getting crushed anymore. It's actually up at this point, up 1.4%, up about $6. But earlier, it was under $370, right around $370. So it was down a good chunk. But quite honestly, I didn't add more to it. I'm going to be honest with you guys. I did not add more to it, but that's okay because earlier this week I added some at $487, added more at $418 yesterday, so I'm cool with it. And I'm well aware that the markets could go lower. That's why I didn't want to add more to it and force any more money into it, because we always have next week, guys. We always have next week. And like I said and I've been saying, I have a lot of cash right now on the table ready to go, and having that cash gives you the ability to buy stocks or not, or you can sit on the cash. The beauty of it is it just gives you the options. So at this point, I feel more comfortable going into the weekend with cash rather than buying into Tesla. Not saying that Tesla's going to crash here because, again, I have money in it, but I'm just comfortable waiting until next week until I add more money to it. And I also bought NVIDIA yesterday, if you guys recall, a very, very small amount of NVIDIA at $519 per share. This stock went down under $470, I believe, today, maybe to about 480. Maybe I'm exaggerating a bit. Actually, no, 470. Geez, guys. It went to 470. I did not add more to it. Same with Tesla. I'm just holding on to it at about $519, and I'm well aware that it could drop further next week, and if it does, I would like to add more to it. And let's say it pops to the 520 next week, 530, I'm okay to average up too. That's the game we're playing at this point. And again, that's what cash allows you to do. It gives you the opportunity to do what you want with it. And on top of that, I'm still on Apple. Apple got slammed today. This is one that I was looking at buying a little bit at 112, 13, but I did not pull the trigger on. I was more enticed to buy Apple today than any other stock, but I didn't. It actually got down to $110. Now we're about $10 off those lows, so I'm not looking to rush into it right now, but I would love to maybe buy some next week, but as of now, I'm just comfortable holding on to it. And you guys can see Apple is breaking out of this 5-day, 5-minute downtrend. It's trying to, at least. And the fact that we haven't really popped out aggressively quite yet, that's another reason why I don't want to buy in right here, because I don't want to get faked out. Let's say I buy here at 118, 120, thinking it's going to break out, and then Monday, or actually Tuesday rolls around since Monday's closed. Let's say Tuesday rolls around and it gaps down to 105, I'd be very pissed on myself, let's be honest. So yeah, I'm waiting to see what Apple does here. I don't want to get faked out, and that's for the markets in general, right? Going back to the S&P, yeah, we're breaking out right now, but on the 5-day, 5-minute, this could very well be where we get rejected again at a lower high, then dump down for that lower low and go down even lower. Same with the Nasdaq and Dow, which overall leads to me being very, very careful. And I'm still holding GDX. I'm still holding GLD. These are positions that, quite honestly, guys, I'm not even paying attention to. I'm not watching these like a hawk throughout the day like I do with some other stocks I track, like Apple, Workhorse, Tesla, and many others. GDX and GLD, I'm just holding on to these kind of as a hedge. They're in the background of my portfolio, they're not doing much. They're right around where I bought them, but I feel comfortable with having them as a hedge, which is why I'm holding on to them. So I'm in GLD, GDX, I'm in Apple, Nvidia, Tesla, Workhorse. Those are the main positions, excuse me, guys, that I'm in right now. And I'd love to know what you guys are doing down below in the comments. Don't be shy. Let me know what you guys are up to. I love trying to answer all you guys in the comments. I'll be honest, the channel is getting big right now. Not big like, oh my God. Let me not exaggerate, guys. The channel is still small, but for my standards, it's getting pretty decent, and the comments are flooding in, and it's getting hard to respond, but I'm going to try my hardest to respond to each and every one of you guys, because without you all, this channel wouldn't be anything, and I do appreciate every single one of you guys watching me every day. That means the world to me. So let's get into now some other stocks, some other companies that are interesting here, and most of these are on a massive dip. I'm not going to say discount, because that's complicated wording there, because discount with long-term investing, you'd think, oh, it's at a cheap PE or a cheap valuation. The truth is, a lot of these stocks are still frothy when it comes to valuations and PE. But when you look at their charts, you could argue that if you're a technical trader, hey, they could be decent opportunities to maybe take advantage of, especially if we take and see a rebound overall in tech and the markets in general, which I think it's a higher possibility at this point than us tanking, because the truth is we don't have a huge catalyst that is going to shoot the markets down into crash territory like they were back in March. We're not seeing any dire catalysts here that are going to send us there. I just think I'm leaning more towards the side of this being a little bit of a profit taking, blow off the top, little sell off before we start rallying. And in that case, in that sense, I'm looking at RKT. That's the first one I'm watching here. Rocket. I think it's a mortgage company, but they're called officially Rocket Companies Inc. I thought it was Rocket Mortgage. It might be Rocket Mortgage or Rocket Companies. Either way, this is a company that recently IPO'd. I don't know exactly when. It was a couple weeks ago, I believe, but they recently IPO'd. The stock's down about $10 off its highs. That's a pretty big chunk considering it went from 35 down to about 25. So that's a drop of almost 30%. And they reported earnings that, from a quick glance, guys, Q2 adjusted EPS came in at $1.44 versus 88 cents. So they beat on EPS. I'm not exactly sure what they did in revenue. Let's take a look here if we see what they did in revenue. Okay, 3.38 or $3.83 billion in revenue. That's pretty incredible there, if I'm reading that correctly. Yeah, that's okay. And we see a lot of these companies, or not companies, a lot of these analysts are putting a buy rating and an outperform rating on Rocket. And, I don't like basing my decisions off of analysts, quite honestly. That's not a smart thing to do, in my opinion. You always have to take their opinions with grains of salt. But I like seeing a company that has analysts pushing it up, because I know that people out there use these analysts to buy, for example, right? As crazy as it sounds, that is a good influence on the stock at the end of the day. Although I don't base my decision solely on that, if you guys get what I'm coming from, right? Or get where I'm coming from. But overall, Rocket here, it could end up rallying off of $25, $24. This overall trend that you guys are seeing, I mean, we IPO'd at $17.50, and ever since the IPO, it's been a pretty nice uptrend pattern. I mean, we hit $17.50 up to $25, back down to $18, higher high at $31, sold off at $27, popped to $35, another higher high. So this could very well be a higher low here at $25, so watch out for that breakout. And another one is Microsoft. Yeah, Microsoft, it's maybe not the most cheap stock from a PE evaluation metric, but when you're looking at the stock on a chart basis, 4 hour, it's at a pretty interesting technical spot, right around $210. I mean, this is where we rallied off of back on the 14th of August up to 232, and especially if we break 215, guys, that's where I think Microsoft has potential to take off, especially if the markets in general turn around. If the markets in general tank, Microsoft's going to go down as well, probably, right? Most likely, since it's such a big company. But if the markets run up, 215 breaks on Microsoft, which is a big resistance from the beginning of July. Watch out for Microsoft to go back up to 220s, maybe even back up to 230. And another one here that I'm looking at is MasterCard, ticker symbol MA. MasterCard is down a good amount, about $30 off its highs. That equates to around a 8-9% sell-off. So I'm thinking MasterCard's a decent buy, anywhere from 320 to about 335, where it is right now, right around this 180 SMA support on the 4 hour, as well as the resistance at about 315 that stemmed back from June, the beginning of June, all the way up to the beginning, kind of the end of July to the beginning of August. So if 320, 330 holds on MasterCard, I'm very interested in a swing position there. And same thing with SQ, Square, guys, down about $26 off its highs, holding an old high here at about 135 today, holding also the 180 SMA on this 4 hour chart. This is looking pretty strong when it comes to Square, holding the overall trend, which it's held over the past couple of months. This could very well be where the stock does rally, and it really depends on the overall markets as well for Square, since it is getting to a decent sized market cap at this point in time. And another one here is AMD, and I know you guys probably know this, but the chip stocks and the tech stocks in general here, they've taken a massive haircut. AMD is no different. AMD down about 1% today, nothing crazy, but it's taken a bigger hit yesterday. Yesterday, it literally went from $94 the past 2 days, from $94 down to where it is now at about $80. That is a huge sell-off of about 15%. And you guys can see we are showing support on this 180 SMA on the 4-hour chart. We're rallying off that 76 low earlier today, and this very well could be a potential bottom. If 80 holds, watch for the move back up. $87, maybe back up to the $90 territory. That's what could end up happening here on AMD. And Virgin Galactic, guys, hear me out. I know the technicals are hideous. It's not looking like it's reversing anytime soon. It's downtrending by pretty much every stretch of the imagination. This 20-day 1-hour chart, you guys can see it shows that it's not moving up. It's going lower and lower and lower day by day by day by day. So why would you want to buy this stock, right? That's probably what you're thinking. But the truth is, these are the opportunities to buy in. I'm not saying to buy into this one because I'm not a financial advisor by any means. I simply am stating my opinion, but this is when I like to buy in, when stocks get battered down, when they approach historical levels where typically we see buying, and that is what we're seeing here on Virgin Galactic. Yeah, it's downtrending. It's down from $27 down to about $14 earlier today, but notice each time it's hit $14, $15, it's rallied up from there, whether it's back up to 20, whether it's back to 25, 27, it's rallied off of $15, $14 many times in the past. And the only time we really got under in the past couple months here, the only time we really got under $15 is back when the crisis was happening. So there was a rush to the dollar back then. People were, selling stocks like left and right like crazy. So Virgin Galactic got under 15 and got to $9, but it recovered pretty quickly back above 15 and it rallied up to 20. So I'm thinking the closer Virgin Galactic gets to about 14, 15, heck, even right here at $16, I think that's a decent play, as there is potential for it to get back up to $20. And yeah, there is some speculation there because the trend hasn't really changed, so you do have to take a leap of faith there, but I think it could end up panning out when it comes to SPCE. And some stocks here over the past 2 days that have really not been hit that bad at all. They've been holding up very well. Starbucks. I'm looking at Starbucks here at $85, $86. Today it's actually up 0.4%, down about $3-4 from its highs, at about $89, $90. So this could very well be a dip on Starbucks at about $86 here. Ulta as well. Ulta up 1%, breaking above 240 today. I'm liking it for a potential move up to $250. And Nike as well. Nike hit about $117 earlier this week, pulled down to about $110. Now it's trading at $113. This very well could be a nice little dip before we take out $115, $117 again. So overall, guys, those are the main stocks I'm watching. Some thoughts on the markets overall. Let's loop back around and take a look at what's going on now. S&P, Dow, Nasdaq. S&P is now down only 0.5%. It's crazy, guys. Down only 0.5%. This 5-day, 5-minute shows that we're recovering aggressively, but still, the downtrend's still intact. Don't let this fool you. Do not let this could be a bull trap. Don't let this potential bull trap fool you guys. And same thing with the Nasdaq. Nasdaq is down only 1% now. When we started the video, it was down 2%. So it's gained a 1% during this video, and it still has not broken out of the downtrend, still trending under 11,600, and the Dow is right around 28,200, which it broke that, so that is a decent sign that we took out that resistance and yesterday's lows, but we're still under the 180 SMA and the highs from earlier today. So don't be trapped into this. Not saying we're not going higher, not saying we're crashing either, but all I'm saying is don't be trapped and be ready for anything. I'm going to leave it at that. And when you have cash, another thing, when you have cash, you have opportunity and you can do what you want with that cash. So that's it, guys. Expect some uploads. I think tomorrow I'm going to make a video. Maybe Sunday or Monday I'll take a day off, but Probably not. I'm probably going to have videos all these days coming up here for you guys. And I'd love to know what you think. Let me know in the comments. Drop a like on the video if you guys did find value. And join our Discord chat. It's free. Our Facebook group, it is free as well. Link down below in the description box. And don't forget to claim your one free stock from Webull. That is valued up to $1,600. All you have to do is deposit $100 into that account using my link down below, and you get that free stock. So I'll catch you all in the next video. Don't let the stock market rattle you too much, guys. And yeah, have a great weekend. Be safe out there. Thanks for watching. As always, it means the world to me, guys. Peace out.